Hello, traders. Gary Wagner here. 10:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 20th day of January, 2023, and this is the Weekend Review. We have gold trading modestly higher today, with the most active February contract currently fixed at $1,929.90. That is a net gain of $6 or 0.31%. Gold traded to a low of $19.22 today, filling our limit order that was to buy gold at $19.22. We have a stop at $19.01, the high today, $1,939. The modest gains in gold today was not with or without strength or weakness from the dollar. The dollar was fractionally lower, down 0.05%, with the index fixed at 101.78. Lastly, silver did have a nice showing today, gaining almost a full percentage point, with the most active March contract currently fixed at $24.10. As you know, we were extremely fortunate to go along with our limit order at $1,922 per ounce basis the February contract. That was precisely the low that gold came in at. It did trade to a high today of $19.39, but since has backed off and is currently trading at around $19.28. As you know, we currently have our stop at $19.01, and we will look to see what kind of momentum gold carries through the weekend as it opens up in Sunday in Australia and then travels into New York on Monday morning. Currently, we recommend maintaining your long position as well as your stop. In terms of the longer term, if we are fortunate enough to see gold continue to rise next week, the first area that I think we would need to look at in terms of resistance comes in at $1,967. It is based upon this top here, and you can see that I didn't list it as one of the lower highs as gold was in a multi-month correction. However, it is a top nonetheless, with major resistance coming in at $2,000, and that, of course, is based upon this top here that came in April of last year. We have converted our daily candlestick chart to a Japanese average or Henkinashi, and even though it was a fractional or modest move to the upside, what it does reveal through this particular chart style is that in fact it has gained strength. I'm talking about the trend itself. We have a nice body size and no lower wick. Lastly, we are looking at a weekly Henkinashi chart that shows that this week resulted in solid gains through the week. We still have now the third consecutive week in which we have reasonable body size, the strongest being last week, no lower wick for the last 3 consecutive weeks, and although this type of chart lags behind real-time data, it certainly indicates that we could see gold continue to rise over next week. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.